Good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you please type the number one in the chat box, let me know that you can. I would greatly appreciate it. Good Tuesday to you too as well, Jim. Yeah, it's weird, right? Afternoon, Kevin. Hey, Helen. Brenda, good afternoon. Thanks. Thank you there, Andrew. All right. Very much appreciated. Yeah, I always try to get the volume up first before I worry about the camera. Make sure everybody can hear me before we're trying to diagnose two problems at once. All right. There I am. I don't know why you guys want to see me, but I'm there. All right. Well, welcome everyone. I hope you had a great 3-day weekend. For some, I guess, anyway. It was a really nice time. We had some great weather here in New York, so we got very lucky. My phone has been blowing up today, so I'm going to go ahead and mute all of that. For those of you that are following us on YouTube or in the hub, congrats for joining us here today. It's great to have you. Anybody that is not on our Zoom room, you will be able to directly put your questions up into the YouTube chat or in Hub, which is the same thing, and they will automatically be sent to our tech, and it will get them over to my tech team, and they'll get them over to us. So with that, keep in mind everything we look at is for education, and nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So here's our agenda for today. We're going to go through our follow us page. Then we've got today's trades, economic reports, market review. We'll look at what upcoming trainings are in the future. We'll get into our weekly topic and then your stocks at the end. Folks, that section there is something you should be thinking about right now. At the end of the training, when we get to that point and I say, what stocks do you want me to look at? That's a place for you to drop in a candidate for you to take a look at. I can't tell you should buy it, you should sell it. It's against the law. Ask the SEC. They will agree with it. They made the rule, hell. It wasn't us. But it should be a place where you can at least get some insight on what I see looking at your chart. And the more detail you give me, the better. If you just say, what do you think of Apple? I'm going to tell you just what I see on Apple. But if you say, I'm thinking about this for a long position with a call, or I'm going to sell a put, or I'm going to do a credit spread, or whatever it is, if you give me more insight or what you see in it, I'm bullish on this. What do you think, Rob? I can tell you what it is, and none of it is ever meant as well, you're wrong and I'm right type stuff. Nothing to say I'm 100% right, but it gives you another outlook on it before you make that decision. I ask all the time of my trading partners, people that I am very close with, hey, what do you think of this chart of Apple right now, or of ExxonMobil, or whomever it might be? So, all right. So here's our follow us page. Everything on this page, guys, all of these social platforms. Right now, our goal is 45 pieces of content a day to go out on the internet, right? We are now kicking up massively our blogs. That's going to be a very big part of it for us is our blogs. Podcasts we're doing all the time. Brand new trading newsletter called The Trading Post. If you click on that, it'll take you over. There you go. Andrew dropped that in. It'll take you over to register for it. You are not automatically registered on this email list. This is a separate list from what we have of all students at Wealth Builders. So if you are interested, just go over to that link, register for it. It comes out 5 days a week. It gives you an insight of what's happening in the market. We've got brand new segments that we're adding there all the time. There's a hint of Trade with Rob in there as well. So just wink, wink, nod, nod. But any of these platforms, folks, you will find us on regularly. All right. So just keep your eyes open. There's content coming out constantly. All right. So let's take a look at trades from today. What trades did you all do? Drop them in. Now, it doesn't matter if it's funded or non-funded. It doesn't make a difference to me. They're all non-funded. Win, lose, or draw doesn't matter. You did it is what mattered. It's not that you made money or lost money or broke even on it, or I could have done better. I pulled up my stop too soon, or I pulled my exit too soon. I put my stop off and it went against me. It's more about doing it and professing it that you're doing it, because the more you participate in this, the better you will become. Let's see. Brenda said, nice. $36,750 in 37 minutes this morning. I didn't get it, Brenda. So I looked already this morning, unless my team sent it. It actually just came in, but it's not that easy for me to open it up because it'll have email addresses in there, and I can't do that, Brenda, because yours would be in there too. But basically, sorry for the side of my head. It was a, 37 minutes. 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 Trade on, we had a sell, a buy, and a sell. Yeah, so I'm not seeing equal numbers there, Brenda. That's for sure. But this is on SPY today. So maybe you sold seven. Oh, I see this. So you sold to close on a call and you, all right. So she basically bought a put at 11.14 on SPY for 247 and sold it, 300 contracts, by the way, sold it at 11.50 for 395. So about a buck and a half profit on there. So great job on that. Fantastic. Good job there. Let's see. Ed said $300 on S&P 500. So for me, not a whole lot happening today. Too busy of a day back to get any real trades off today. It is interesting though. We'll talk about S&P in a moment on how we broke down below that 21, and that gap will preclude a lot of trades from taking place. Right? Let me open up my quote board. It just makes it easier, so more things are there. We go. Good. So all of these should populate fairly quickly for us, right? So Amazon has been a fantastic one for us, but here you get this gap down. How do you trade that? Very difficult, right? There are going to be some setups that we could trade this off of, right? Particularly if you are following along with the Trade with Rob stuff. So let me just see. Let me open that up for a second. Where is it? Okay, there we go. When you got 6 monitors, it's interesting where things tend to wind up. When you open it up, it doesn't open on the same place as it did the last time. All right, so it's not liking something there. All right, so this is, and I'll update these later when I do the trade with Rob. They were for the 28th. But when you look, so for this year, we've got, if you look down at the bottom here in this section, we've got 59 trades that have gone off this year, right? Of those, 52 of them were winners. You can see the columns up here, right? 52 were winners, 7 went against us, 0 were break even. So we got an 88% win rate on our trade with Rob candidates that we take. Okay, and here's the fun part of this. Right? You can see January 3rd right here. It's on line 6. Right? And if you know how you're reading Excel and you see these little spaces in here, 36 to 38, 38 to 42, 42 to 45, 45, the next line is 151. That's because those are hidden lines in there. Anything that did not go is a hidden line. So, 81, 2, 3, 4 are hidden, right? So there's a hidden line. So we get one trade off every, probably 1.5 to 2 trades off every 2 videos that I do, basically. So we're at, call it 200 lines, and we've done 60 trades. All right. So about a 25%, whatever the exact number is there, of total trades taken. Right. But on average, so up this year, we're up 16,053 basically for the year. $271.75 per trade on average for all of the 59 trades taken. That includes the 7 that went against us. Right. So overall, when we look at it, not too shabby on the rates of return on the trades that we've got. Now, when we look at Pop, this last week, we had a shortened week with Pop. Right. So not a lot of trades in there because of, well, let me show you, because of the move on the S&P. Right. So we had a nice move up. This moved down here last week. Right. And then now we've got a 4-day week. And then this gap down, that we didn't get a whole lot in there with this. Once everything pulled back, the S&P pulled back, stocks pulled back, you didn't have a lot because we'd had a good run already. So we had stocks near higher levels than lower levels, or not as much near supports. This gap down and then the gap down today, which once again, we'll talk about in just a few minutes. But this is the Pop trades with doing just one contract. Just worry about the stop out column. This is just me copying from the other page. And you could see if you look at, well, if we look at just August, right? Well, okay, that's got to be taken out. I don't need that, right? So if we look at just August, that's right here, right? So what we're going to do is let's group those together, right? Yes, I use old school language in Excel, right? So we're up on one contract, 17 grand for the month of December. There we go. We're up $17,000 with one contract in power option plays. And if you look at it, I don't know how many trades that is, but three of those 20-ish trades went against us. So we're maintaining a fairly high level of consistency in pop as we are inside of Trade with Rob. And it's not a matter of one is better than the other, right? Trade with Rob has, here's the stock, here's the setup, go. Pop has all the details inside of every single bit of the trade, right? But a lot of trades have gone off, and that's just our one contract trades. We also have them as a 10 lot as well, 10s and 4s. And you can see on this, if you look here, this AMD trade in August, we only got one contract here because this is a one contract trade. So we're doing here, power option plays one contract. This top line, one contract. That's all it is. But we are up $123,000 this year in our non-funded account, right? And here's the thing: the goal is for you. As we look at these trades, the ones you do, the ones that I've done, and I get it, the market's down today. A lot of people are not trading, and that's fine. But you look at these trade setups here, it's not a matter of I'm doing it and you're not, or Brenda's doing it, or Ed is doing it, or whomever. It has nothing to do with that. It has everything to do with, can you take some of that information and learn from that? If I go over a trade setup here, I mean, let's look at Amazon, right? Watch. Okay. We've done a lot of trades on Amazon. I mean, a lot of trades on Amazon. Okay. And all of these trades, by the way, if you are on TikTok, Instagram, Facebook, or LinkedIn following us, we put every one of these trades when they're done up on Facebook, LinkedIn, TikTok, Instagram. They are going to go on Twitter. That's next. They're on YouTube. They're in Reels as well, right? They're all of them. So we get them on all of the major platforms out there. Let me see. This is a little further away. I don't know if I'm going to get. I don't know if I'm going to get the data there. Let's see. Let's look at APP. It's still pretty far back. I was away for a week, so we had a bunch of days where I wasn't. Here we go. Broadcom would be a better day, a better symbol. I think I can get all the data I need on the intraday on Omega charts. So on the 21st of August on Broadcom, right? So let's go look at a 5-minute candle. So what happened there? We were in a bearish bias. We closed right here, so we were at a rank of 2. We gapped down, we stretched up, and we failed. You know what that's called? That's a plan. That's a plan. When I looked at this on this night, whatever this was, the 20th, 25th, glasses would help, 20th, right? When I looked at it that night, actually I looked at it in the morning, but when I looked at it the day before, the morning before, when I looked at it for that period, I made an analysis, a decision of what had to happen for me to take this trade. So it could go down a little bit. It could have gone up a little bit. I would have been okay with a move up. Fail below the fib line, retest and drop. Since it gapped down, it had a retest and drop, right? Whatever it is, included some form of retest and drop, right? For me to want to take that trade. So if we go and look on the 21st at a 5-minute candle, so here's the 21st. Can you see it here? Here's the fib line. Here's the move up. We closed right at the fib line. I mean, right there. This thing was screaming at you. Hello, are you paying attention? Take the damn trade. It was right there. Time of day for that fail on that candle was 10:35. So it's a great time in the morning still, right? As long as we're not past that 11:15, 11:30. Excuse me, that's where it starts getting a little bit shaky to me. But the setup was right there. So what did I have to do? I had to take the trade. All I had to do is hit enter, right? Trade station would have been sending off aruga sounds to tell me one of my triggers were hit. I see the message in the bottom, sys tray on Windows, and go to that template, to that chart. Go ahead. The setup is already there. Go to the option chain, click enter, go. I already knew what I wanted to do. right? And as I'm watching it, the Aruga is going off as we're hitting the line to the upside because that's what I want to see. And actually, my alarm is going to be just a little bit below that. It's not going to be right there because it may not exactly hit the line, right? And then you've got a decision to make. How do you manage that trade? Do you hold it to the end of the day? Are you getting out by lunchtime? Are you waiting for things such as, well, I'm going to just draw a line down all of this, and when we violate that, I'm out of that trade. It's following a trend down. When it's no longer going down and starts going up, we get out. It's not how we got out. We got out towards the very end of the day. Okay? We got out right 15 minutes prior to the end or so, right about here. All right. And that's just because of the way we take our trades in pop. But this right here, it's a systematic approach to how you do it. It's a systematic approach. And we're actually going to dive deeper into this component a little bit later today. But it is a systematic approach to how you identify, enter, manage, and exit that trade. How did I identify it? It's on pop. It's on my list. I did all the pre-work already. There's nothing on this list, and I don't hide it ever from anybody. If you're all sitting there saying, what stocks do you trade? You're looking at them on my screen. That's 90+% of what I trade is right there. Right there. I don't need hundreds of candidates. I don't need to go find new ones every day. I know the heartbeat of these. When you look at an Amazon, a lot of these are kind of dragged out of the way. When you look at an Amazon, I mean, from the 11th, I think it's July 2nd, 1, 2, 3, 4, 5, 6. I think there's one more around somewhere. I think there was 7. No, it's 6. 1, 2. Yeah, it's 6. So there are 6 trades. I thought it was 7. There are 6 trades since July 2nd that we've taken on Amazon. Actually, this is Broadcom. My bad. Amazon, 1, 2, 3. I gotta scrunch down. 1, 2, 3, 4, 5, 6, 7. Yeah, 7. That's what I thought. One of them had gone against us on the 14th, which is the 7th, which was the first trade we did. We were down $195. There was a wash on the 17th trade. And then everything after that, 1,700 in profit, 3,000 in profit, 4,000 in profit, 1,000 in profit, right? And that's doing full contracts. If you did just one, guys, what if you only did one contract? Because this was 10x. What if you did one contract at $97.50? You could almost afford McDonald's today with as expensive as things have become, right? You get the idea, okay? And we already looked at Broadcom, right? Costco, we've got 4 trades. All of them have been to our advantage. All of them are puts. They're all put trades, every single one of them. And I go back and analyze any one of these on every day. That's why I'm drawing them all on the charts now. The charts are getting busy, trying to figure out mechanisms to make it a little bit less invasive. Carvana. Oh, but Rob, you suck. Both of those trades went against you. You're right. Both went against me. Yep. What am I going to do? Can I offset that with a trade on, I don't know, Booking? Where we're up $10,000, $18,000, $7,000, almost $8,000. You can't look at one stock. And if you're the person like I used to be that says, you know what? On Carvana, I want my money back from them. That was me with Apple many, many years ago. I wanted my money back on Apple because I was losing money on, I was winning on everything else, doing well. Apple, I was handing the money over, hand over fist, every trade, give, no wins at all. And I kept fighting, stop trading Apple. If you can't figure it out, don't trade that stock. You don't have to win on that one. You want to win, but it doesn't have to be on that stock, right? So make it a win by not trading it. Make it a win by going and doing something else instead, all right? DoorDash, a little bit of mixed bag there, but $400 down, $500 down, $1,300 up, $400 up, $3,500 up. Goldman is Goldman, right? 11,000 plus 5,000 minus. The Depot, right? You can see 1, 2, 3, 4, 5, 6 trades since the beginning of July. One went against us. Eli Lilly, they've done well for us. 17 grand on Eli with 2 trades. See, I started making these smaller, the older ones. Right, but point being is every one of these trades had a plan, right? You've got to have your plan. So as we talk about what trades are you doing or what did you trade today, like this, what did you trade today? You should have a plan, an executable plan for every stock you're looking at. Now, if you're the person that says, I'm just going to wait for the open, and see what's bouncing around and try to pick something up from there, then your system needs to have a very defined set of rules so you know exactly what you're going to do when you choose to look at XYZ stock today. When you look at Roku or you look at Chipotle or you look at whomever it is, what's happening right now with that stock, the pattern that you already have a series of rules in place of how to trade it. And then it just becomes instinctive, right? If you are, listen, I used to play hockey long time ago. And if I would be playing hockey and all of a sudden the puck just showed up in front of me, right? And I wasn't expecting it, I didn't stand there and go, so what do I do? Or here's a better one. I played football. I played defense. And I was really good at tackle and turnovers. I was real good at punching the ball when I would tackle somebody. And there was no question that if the guy caught a ball and he did not know what to do, he stood there and goes, oh, wow, I caught it. He was in for a surprise within the next half a second when I hit him, right? He got that ball and he ran, right? Every one of them ran, all right? I mean, we had some pretty big players on our team. I was the little guy at that time. We had some pretty big players on our team. So you've got to have a plan. You've got to have what it is you're looking to do for your individual stocks. And you've got to have that every single day, day in and day out. It's the only way it'll ever work if you do, right? And on days like today, when you get these wacky moves, it's okay to sit back, get in position number one in the chair. Who cares? Today's not a trading day. Go fishing, go golfing. I don't know where you are in the world, but in New York right now, it's absolutely gorgeous outside. It's in the mid 70s right now, a little bit of breeze. It's beautiful out. Go do something else. Doesn't have to be in front of a computer. Go clean the grill. There you go, Brenda. I did that every day this weekend. We barbecued Friday, Saturday, Sunday, and Monday. All 4 days. So, and I'm doing two. I'm doing a grill, and then I've got a portable that goes on top of it, flat top, like a Blackstone. So I got to clean two of them. Economic reports. Let's go check out what's going on with the economics. So here we are. Guys, here's my very straightforward, patented system of what I look for. If it is before 10 o'clock, I'm sorry. If it is before the market opens, I don't care. If it's after the market opens and it's red, that is an important report. If there are orange reports around it, great. Okay, great. 2 p.m. today, orange report, Trump speaks. Listen, this is not OPEC announcing oil prices. I think they need their own color for Trump. More aggressive than red, right? Maybe it's dripping blood. I have no idea. But you just don't know what he's going to say. He doesn't necessarily stay on script. He takes so many questions, and sometimes he doesn't think as much before should I even answer that one? He's gotten better, but I don't believe this is an orange report. I think at 2 o'clock today, you may hear, I don't know, you may hear something that could upset the apple cart. If he alludes to, we've been in contact with the attorneys at the Department of Justice, and we do believe there's a way to fire Powell, or we do believe there's a way to dissolve the Fed, right? We're talking havoc, right? Tariffs, exactly. It could be any of those things, right? So I think this is an important report that I'm going to pay attention to. Now, why are these important to me? The market is open. If you're in a trade and the Purchasing Managers Index, PMI, came out at 10 o'clock and it was off. Purchasing managers are paying more money for products than they had before, blah, 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 right? There's less material coming in, higher prices being paid. All of that has a tendency that it could drive the market not up, but down, right? But it could drive it one way or another. If you're in a trade, you've got to make sure you're not on the wrong side of that trade. So you might want to be cautious depending on what you're trading. A great example is if energy stores are coming out and you're trading an oil stock and that report comes out and something wacky happens, you could see a massive move in the market. So tomorrow, 10 o'clock, JOLTS, big report, right? Not only for the Fed, but big report because the market's open. Now you got 8:15 and 8:30. It's not that they're bad reports. Not that they're bad reports. They're very important reports, but the market's closed. Unless you're trading futures like my friend Scalper Ed, right? And so many others that are here, but Kevin and the likes. If you're trading futures, that's important to you. But as a futures trader, you've got a whole different way of looking at it. You're trading as a futures trader. When those reports would come out, not as many at 8:15, but at 8:30, when that report would come out, I'd be looking at, so here was the S&P 500, right? And let's say there was some support level in there, and the S&P has kind of been around like this, right? And then it's flattened off a little bit. And now here we're at 8:30, right? And the news comes out, and you perceive the news as being positive, but the market continues to drip down or run down, not drip, it's running down, right? It starts moving down. I'm waiting, and the first sign of strength there, I'm all over that like white on rice because I'm expecting that to happen because it's a 1, 2, 3 punch, right? The announcement came out, drove it down, and I'm looking for the move to push back up. And it could be the exact opposite. It could drive it up, and I'm not going to trade that up. I'm going to trade the down, right? Certain news, again, certain ways the market would work, but I'm going to drive based on that. The 11 o'clock, 10 o'clock rather, Thursday, which is services. Today is manufacturing purchasing managers index. And then Friday is all pre-market. It's all 8:30 reports Eastern time. Market doesn't open until 9:30 here. So it's not going to drive the market unless you're in futures or you possibly have an overnight trade that you're holding on to, which very well could be. Sunday, OPEC meeting. I don't expect you're going to hear anything crazy coming out of OPEC at all, right? It's getting harder for them to make money right now on oil. It definitely is becoming a little bit of an issue. Prices are down a little bit from where they were, which is good. Where I live in New York, we're average of, I want to say 295 is probably an average for cash. 309 on the higher end. Lower end is 283 or something like that. Even Costco, which we go to regularly, they've got a gas station. Our Costco, they're only at 287, 285, 279 maybe. They don't even have those big drops any longer like they used to. All right. So economically, we've got a lot happening. And then I shared this not long ago. We right now have an 89% chance of a 1/4 point cut for the September 17th meeting. 15 days away, right? 89% chance of a cut. That's pretty darn good, okay? So no real chance of getting any kind of half-point cut, that's for sure. But in future months, there is some chance of half-point cuts. All right, it's 50-50. Well, not necessarily. But there is a bigger chance of drop of what's going on right now, and that's really the month you want to focus on, right? 89%, almost 90% chance we're going to get a 1/4 point drop this month, right? So here's a question. What are you going to do if the government shuts down? And I don't mean about your job or, God forbid, I would hate to see anybody have to go through that if you're a government employee, even though you'll get the back pay at some point. The bank doesn't want to hear about that. Well, the government's on strike, so as soon as they give us some money, no, we're going to foreclose, right? But I'm referring to, as a trader, what's your plan, right? If that happens, what are you planning to do? What do you think is going to happen in the marketplace, right? And if so, how are you going to attack that? Are you going to buy and hold stocks? Are you going to short stocks? Are you going to buy puts? Are you going to buy day trades, swing trades? What is your plan? And that, if any of you play chess, and I play chess. I can play chess. I don't, but I can play chess. But I'm not very good at it. Anybody with any real experience will destroy me. In chess, they say a good chess player is thinking 7 moves ahead. I might get 2 or 3, maybe 2 or 3. Right? That's it. If you just focus on the one move right now, it's not enough. Okay, so I moved there. Now what? I bought the stock. I ended the trade. I sold the put. I bought a put. Now what? You've got to have more steps than that ahead there in the market, right? So, good point. Jim said he normally runs late. I think that's a lot of presidents are normally running late. Sorry, folks, I didn't make it on time. I was saving the world somewhere, right? It's like my doctor's excuse. Yeah. I know. I'm 2 hours late, but I had another patient that was dying and I saved them. Really? Does your patient walk in with plates of food and their drug carrying bag to, of what the sales rep is for? That was your, uh, uh, Okay, let's see. So took a look at economic reports. Let's go look at the market. So this is why my phone is blowing up today, which is why I muted it for us here. That gap down, right? We closed, we're down right now 91 points. We were down in pre-market. I don't know what time it was. I saw it this morning. I had an early appointment this morning, and we were down, call it almost 50 points on the pre-market. Okay. And, which means, and we were at a fair market value of minus 2.47, I want to say. So where the S&P settled, it really should have been 2.5 points lower after they did all the calculations, right? And it should have been 2.5 points lower. So it closed here. It should have closed here, but it's actually was trading down here. So it was almost 50 points down. And like I said, we've doubled where that is from then. So do I like it that we're down here? No, but what does that mean? Am I going to kick and scream and cry and go in a corner and pout and suck on my thumb and, gripe about all of this? Or am I going to figure out a plan? So sitting down here objectively now, and I look at this, it's okay, what's happening? First thing you need to understand is we've got a series of higher lows and higher highs setting up in here. Okay. So we had a high, we had a low, we had a higher high. Actually, this gave us a higher low, right? And we had a couple more here. We had a higher high, and then we had that little pullback, higher low, higher high, higher low, slightly higher, but it is higher, okay? We move up, but that right there, that was our first close below the 21. The green line is the 21 exponential moving average. The next day, we got back into a bullish territory. We closed back in bullish neutral. We got to bullish, and we had a nice 6 or 7 day run there. We pulled back again. This time the wick broke through the 21, and then we closed down below it. So a slightly different plan than we've seen before, or action than we've seen before, right? And now we closed in a bullish bias rank of 3 on Friday night. Today we opened down below this fib line, down below the 21. We stretch up to the 21 and we fail, and we're falling down. So now, and these are the questions I'm getting. Where does it go to? Where is our bottom? Where do you see a support? What do you think of this level? What do you think of that level? Looking at this objectively right now, the very first level is this recent swing low. See this right here, when we broke through that one day and came back, that was a signal of the bears tried, whatever the bad news was there, and the bulls took it back over. Right? This, I believe, is going to be a lot of this tariff-based of tariffs are illegal. We got to give all the money back that we've collected, as if some state judge, federal judge somewhere in some state gets to make that ultimate decision of where the president spends the money. So, or charges and so forth. So we stretch down below on this one, come back up. We close in a neutral bullish neutral bias. Here we close down in neutral, right? And barely, this one was a lot further down, barely, but we are there. But we do have a new swing low in there. We had a higher low here. So low, lower low, higher low gives us a swing low, right? We moved up, we had a high, we had another high. Actually, this high was not as high as this one was. This did, though. That gave us a higher high. Then this one ran up into what is called the blue zone, which I'll share with you in a moment. Actually, let's do that first before we get to the next ones. So I drew what's called an ABC pattern. I came from where the fib started to where the fib ended. That's A to B. C is the lowest low that we put in. Right? 3 lines populate from there when I drew that. The first one is this green line, which is a 236. Right here. Basically what that says at that 236 is once we get above that level, it's okay to start adding or considering it bullish once we get above. This really was not a very, I'm sorry, it was this one here. That was the C. Once we get above that line, it's considered that it's bullish and we can start taking trades. So once we got above this blue line, which was our 0 there, once we got above that, it was okay to start going bullish, and we went crazy from there. All right. The 618 should be everybody's target. That is where you should be targeting of where my trade is going. So longer term, I'm looking at this purple line 618. Now there's another purple line up here. Forget that for a moment. And then there's a 1 line here. That 1 line basically is this. If we take where the fib started to where the fib ended, right? And probably easier to do it this way. Okay. We take where the fib started and where the fib ended, here to here, right? And then we duplicate that same distance, whatever that dimension is, we duplicate that above. And that's where that green line is right there, the 1. That's 100%. This distance, the distance of A equals the distance of B. Okay? But it equals it off of this level right here. So it's actually from here to here is where it's the same size from. But we're stacking it on top of the A. Okay? In there. And that's what the one line, let me bring it back closer. It's too far away to see it. That's what that one line up there represents. Now there's another purple line here. So what happened was we wind up with a fib line right here, right, which is a 618. Is it? Let's see. Yeah. It's a negative 618 right there. Okay. And then we've got this other purple line up here. What is that other purple line? That other purple line came off of an additional ABC that I drew. The 236 is not here. The 1 is not there. Only the 618 is there. And that's because when I'm looking at drawing the lines this way, when I did it on the first place I drew from, every one of those lines is going to stay in place. 236, 618, and 1. When I did it off of this, which was more of an interim period, saying, all right, it's not a place to draw the fibs from yet, but it's the best that we have. Can I get any confluence? This purple line at 6511 overlaying that 6504 is confluence. This blue zone is the distance between them. Well, you're going to see a line right inside of there, which was 650823. That's the all-time high. We hit that last week. So the way I described it, and if you heard me talk about this in Power Hour last week or even in the update for our Sunday newsletter, is you're in a room right now probably, and there's a piece of sheetrock ceiling. If you ran up and hit your head on the ceiling, would it hurt? Yeah. Could you get through there? Possibly. If you did it 2 or 3 times, yeah, I could break through for sure. Right? Even with your hand, you probably, as long as you're not hitting the beam, you'll be able to break it. Well, the blue zone and then that all-time high, that gives me 3 pieces of sheetrock on the ceiling, or the equivalent of, right? It makes it that much harder to break through. Add to that, and I've talked about the negativity of what's out there in the market. There's so many things that could disrupt our market right now. Tariffs, as we're seeing them, of course. Russia and Ukraine, Middle East, China, China tariffs. What if China decides to put a 500% tariff on medications coming into the U.S.? What if China decides to call all of the money that the U.S. owes it from T-bills, right? From bonds that they bought from the U.S. All right. So there's a lot of uncertainty out there. The thing with tariffs, and then on top of that, the big story on CNBC is, well, we can wind up having another shutdown coming up soon. Yeah, you could, right? But that's every couple of months we could have another shutdown. It's not the way our government is built. Jim said on the S&P daily chart, put the EMA of 34 on, and it's the candle that is there right now. So let me see. I think I have one in here for that, Jim. Let's see. Edit, come on. Okay. I don't. So let me change the 55 to a 34. All right, and that's what Jim was talking about. This brown line now, he said that if that's at 34, we're sitting right where it is right now. So very good point on that, Jim. I'm going to put it. Did it let me do it? No, it did not. Okay, so I'm going to put it back at 55, and let's look at where it sets right now. Not only did it hit there, Jim, it comes right in line with where it was the last time too. So good catch on that. Let's hit E for edit. No, that was R, not the right letter. Okay. So let's go back to 55. Okay. So what I'm looking at right now is this. When I look at the S&P 500, I'm doing my analysis. Where do I see it going, right? I'm looking at this line right here of 63, 43, 44 level, whatever it is, the recent swing low, okay? I'm looking at that as my potential bounce point. If we break through that, everything has changed since this last run has started, right? From where we crossed up, right? And we got this new fib in place and we made that bounce and we got into a steady flow. We have not seen a close. This was the first time down below. This was the second time down below. And look, they're getting closer and closer. Look at the distance, right? Look at the distance. And now look at this distance, right? It's getting closer and closer to each other. So for me, I'm looking at, are we going to see that pull back to that level and bounce? We're in a neutral bias right now. If we break down below there, oh my God, the world's coming to an end. No, I now have not two pieces of sheetrock, but two pieces of plywood. This is a floor, right? I've got extra strength. There's a 618. There's a fib line there. Which fib line is it? Will make a difference as well, but you get the idea. There's more strength here. The 55 is right there. We violate all of that. It pretty much says, hell in a handbasket and just throw money at puts. It looks like, at least for a short period, we'll go down. Now, September 17th, when they drop rates, unless the Fed comes out and says, oh my God, we're in so much trouble. We should have done this months before. We didn't. So sorry, world. But you're going to have a lot of pain over the next couple of months because of this now. Unless something like that comes out of the Fed's mouth, you're normally going to see a pop from that announcement there. Stephanie said, what is the significance of the 34 EMA? So Stephanie, when you look at a Fibonacci number series, you got 0 and 1, and then another one, right? Then the number 2, then 3. These are all fib numbers. Then 5, 8, 13, 21, 34, 55, right? And then so on, 89, 144, and so forth, right? These are all Fibonacci numbers, okay? So the 34 is a Fibonacci level. For me, anything 55 or less is exponential. Anything 56 or more is simple. I know most traders look at a 50 as a simple moving average. I don't. I think traders paired up the 10 and 20 as exponential and 50 and 200 as simple because now I have 2 and 2. It's almost like, well, I'll never have a number that I'll never give someone more than 5 things because I can't count them on one hand. Why? Use a second hand. Use a damn calculator. Yes, I still have one, right? Use a calculator, right? If you can't use your hands or your phone's got it, your computer's got it. You're welcome, Stephanie. Oh, there you go. And Jim, you know what, Stephanie? Jim said that right after I said your question. He said, let the newer traders know 34 and 55 are fib numbers, EMA, not SMA. Right. Exactly. And I have, if you're in POP, there's a chart inside of the manual, twice a week on our action plan that shows all the fib levels and their midpoints as well. Okay. So right now, am I bullish on the market? No, I'm not bullish on the market. But am I running scared yet? No, there's no reason to. Am I cautious? Without a doubt. I'm not here loading up on long stocks or calls at this point, right? That was a big hit. Portfolio hits, everything when the market drops like that. Am I selling my portfolio? No. Am I preparing myself? Yes. Do I have puts on some of my positions? Maybe. All right. Just in case things like this are happening. Right? Nothing wrong with being prepared. Be that Boy Scout, be that Girl Scout. Be prepared for whatever comes next. It needs a retracement to get a bounce. Yeah, so, I mean, but it could still just break right through that level, Brenda, without anything. It just go right through it, right? Which is where the fear comes in, right? And then there's a lot of strength. It could break right through. They don't tend to, but they could. Right, to find a support. Yes, it needs to do that to find support. Exactly. Jim said you have a Fibonacci number series with the midpoints document. You can also pull up if you can find it fast. Yeah, it's inside of my POP manual. We're a little bit behind, so I'm not going to pull it up today, but you are right. It is in there, right? Okay, let's go back into the action plan. All right, so what do we got coming up here, guys? Most important thing. Yes, we got Mastermind Group coming up, E-Mini, Inner Circle, Trading You, all important. Power Hour, Trading Coaches Playbook, very important. September 8th, the week of. When is that coming up? I think that's next week, isn't it? Right? It's called Mastermind Week. We have 3 separate masterminds at Wealth Builders. Andrew just dropped a link in there. If you have not seen this, you haven't been reading our emails. We have three of them. We have our Trading You, which is our mini mastermind. We've got our mastermind group, which is our standard mastermind group. And then we have our inner circle, which is basically an invite into the inner circle. All three of these, they're very elusive. We don't talk a lot about them. You don't see a lot about them unless we're doing some kind of class for it, which we don't do a lot of. Inner circle, mastermind, Trading You, right? Next week, you have access to come into all three of them for free. There is no credit card. There's no anything other than you've got to register for it so we know where we're sending the links for Zoom each of the days. Inner Circle Trading Lab is a live trading lab 3 days a week, Monday, Tuesday, Friday. You get to come into that 2-hour live training all 3 days for free. All 3 days. On Monday night, we have a check-in for Inner Circle where Trip goes through and he teaches various strategies and techniques based on what's going on in the market and the likes. He'll be teaching that on Monday night. September 9th, and the 8th is Monday, right? September 9th is Tuesday, right? Inner Circle Trading Lab in the morning, 9 to 11. And then Mastermind Group, I will be teaching that on Tuesday night. That's 8 to 9 p.m., okay? On Tuesday. You'll get to see what we do inside of Mastermind. I already know what the topic is for this week, for next week. So it's already been planned for months. We already know what we're going to teach there, right? September 10th is going to be Trading You. I will be teaching Trading You at 8 p.m. You get to come to that class for free. And then September 12th is the Inner Circle check-in. The Inner Circle Trading Lab at 9 to 11. What's not on here, and we need to add that to it if you would, Andrew, is that Trading Coach's Playbook. I will be in that Trading Coach's Playbook. Amelia will be in that Trading Coach's Playbook. Some of our Inner Circle students are going to be asked to come into that Trading Coach's Playbook. And we're going to answer some questions that you've had throughout the course of the week on Mastermind Week. Right? The whole idea is to introduce you to what we do with Mastermind. Right? You're going to notice some drastic differences in what you see on maybe how you are analyzing the markets or trading versus what you see happening there. If nothing else, if you've got the ability Monday, Tuesday, Friday to be in the live trading lab, guys, you're talking 6 hours of seeing what goes on inside of that lab. Now, you're not going to see that Tripp's trading this right now or Will is trading that right now. That's not about, here, take this one and you trade it too. There's all kinds of issues around doing that, right? And I've had that before, where students have come to classes that I've been at, we put trades on, and at the end of the class, they go, okay, now what? What do you mean? Well, I did the trade. What do I do now? What do you mean, what do you do? Do you know how to manage it? No, you got to tell me. No, I don't tell you. I told you don't do the trades. These are examples to show you how to do a credit spread as an example, right? If you don't understand it, you shouldn't be trading it. So, but you're going to go through and you're going to learn some things about trading and about techniques and strategies that you probably have not heard before, right? So all three of these are open for you to come to, right? So pop, covered call, e-mini are all on regular schedule, with the exception of today, of course, because yesterday the market was closed, all right? Well, and there's the Mastermind Week. And you'll see this on the members area. As you said, Andrew dropped a link in there for it, so it's easy for you to grab, right? Weekly training topic. Do this one thing to increase your win rate 15 to 25%. Now, that is a damn bold statement, okay? A damn bold statement. But I am going to tell you that most don't pay attention to it, right? And all you need to do is look at the S&P 500 chart. That's it. When that gap happened this morning, we gapped down. Ironically, look where we gapped to, by the way, the 6402 level. Right? So 6402, just to give us a reference point. When that gap took place, because from last week, I'm looking at the market and my position was we're going to bounce here. We'll float around the 6504 for a little bit, give the 8 a minute to catch up, break out, retest, bounce, heading on up to that 6634 level and then ultimately 6670. That was my plan, right? Well, guess what? Everyone's got a plan to get punched in the face, right? This was a punch in the face today. So what do you do? Well, I'm looking at a 5-minute chart, and if I'm sitting back here in position on one of the chair, and we get that gap down, I'm definitely paying attention at that point because now I've got to reevaluate and recalculate a strategy because things have changed. So for me, the calculation was this. All right, we broke down. Now what? Well, where do I get a close and a fail? So a retest and a fail that gives me the opportunity to take the trade. And you had two of them in here, right? We ran up, we pulled back, we ran up again, we pulled back, and you had great opportunities along the way on how to take those trades or where you might want to take trades. So I would be looking for stocks that are setting up bearish, including the SPY, by the way, since it mimics the S&P 500. I'd be looking for where stocks set up bearish. Gee, does that look like the same exact pattern except 1/10 the price? Yes. So the exact same thing. You had an opportunity to take an SPY trade to the downside had you known what you're looking for. So what is it that you're looking for? Do not trade. If you're a newer trader, that's a minute. Let me get it. Daily. Nope. Come on. There we go. If you're a newer trader, I just want a daily chart back up there. If you're a newer trader and you're looking at a daily chart, I want you to look at this chart, and if the market is moving down today, your trades are bearish today. If the market is moving up today, your trades are bullish today. Does that mean that Trader Will should stop trading bullish trades in a bearish day? Hell no. Trader Will puts on 30, 40, 50 trades a week. He knows what he's doing. Right? Does that mean Scott should not take the spreads trades that he takes on a bearish day versus a bullish day? Hell no. He knows exactly what he's doing. Ravi or Roman or Rick or so many others, right? They know exactly what they're doing. But if you're newer at this and you are fighting the overall market, you're making a mistake. Well, my chart still shows bullish today. Hey, why don't you find something bearish to trade in the direction of the market? 70 to 80% of all stocks move in the direction of the S&P 500. 70 to 80%. Yet people feel that they need to find a reason to fight the market. Nope, I'm going to trade it to the downside today. And listen, I'm not saying there aren't good moves to the opposite direction. But why not just trade what the overall market is doing? Right? I did an analysis, not analysis, a poll one day in one of my training classes I did live. We had about 100 people in the room. How many of you have traded before stocks? About half the people raised their hands, so about 50 people raised their hands. Right? How many of you feel that when you take a trade, it seems to do the exact opposite of what you planned it to do? And 3/4 of the hands went up, and I guarantee every one of the hands should have gone up. They were just embarrassed to say, yeah, that's me. But 3/4 of the people raised their hand. I said, I have the simplest solution in the world. When you look at a chart and you say, Apple is bullish today, you need to trade it bearish. I said, there you go. You fix your whole problem just like that. And it's not a matter of that's the right way to do it or not. It's a matter of the mindset was incorrect because they made the decision, a conscious decision, this is what's happening today, instead of going with the flow. Mr. Miyagi, best block, no be there. That's it. Teach me how to block a punch. No, the best block is not to be in front of the punch. Then you don't have to block it, right? How do I manage this? When the movement happens, how do you find a way to take the trade? Yes, Brenda, we're probably going to look to redraw the fibs tonight on the S&P now. Maybe. We haven't closed above the 618 yet. Timing wise, we're still okay too. So I've got to analyze it tonight, but we might be redrawing. We might be. You'll see it tonight in POP. But you've got to analyze what's going on in the market and say, okay, do I really want to fight the overall market? Now, if the S&P is down 4 points, that's a flat market. You got up, you got down, you got all kind of the same thing in there, right? But stop chasing your opinion because you have to be right. I'm going to ask you a question. Type it in the text chat. Would you rather be right or would you rather be rich? Give me a 1 for right, give me a 2 for rich. Would you rather be right, number 1, or would you rather be rich? That's number 2. Okay. I would be wrong every freaking time and be happy as a pig in you know what if I made money on every one of those. I don't need to be right. I don't need to be right. Right? Hell, that's what credit spreads are all about, right? You don't have to be right on direction. You can be wrong on direction and still make money. Like flying an airplane, a pilot trusts their gauges and not what they see out the window. Exactly. Exactly. You got to trust what your eyes are telling you, right? What your brain, the feedback that you're getting from your brain, right? What you're seeing there. All right, what stocks you want to look at? Drop them in. We don't have a whole lot of time today. What candidates would you like me to take a look at? Nvidia. Yeah, big one after today, right? Okay, let's bring this out a little bit so we can look at it, bigger picture. We definitely need a new fib on Nvidia. Just the pullbacks have not been great. We got this up, down, up, down, up, down, all kinds of stair step going on in there without any real definitive answers of yay or nay. So right now, though, Stephanie, and we do have a midpoint here. So let me draw this out or drag this out. So we've got a fib in here. So we're looking at 165.81 as our support. We have a 167.55. So about $2 difference there, but 167.55 is the 55 moving average. Here's the thing, Stephanie. If we settle here over the next day or so, break out of the 169.77 retest and bounce, I will probably consider adding to my already long position on Nvidia of shares. Okay. It's the lowest close we've had now since July 22nd. Right? That's the lowest close we've had. And we don't know about the close. I shouldn't say that. We're not there yet. That may not be a true statement. It would be right around here, 23rd maybe. But we're in that range. It's been a while since we've been this far down. We haven't been this far down since the 23rd of July. It was the last time. Okay. So whether or not we get the 22nd, but that's 165.81 is a good bounce point as well. It's a good fib in there. So if we can get the move up, the retest and the bounce, we've got a clear path from 170 to 177. So yeah, I'd be all over it at that point, right? SPY, Brenda's asking for. So I love you're welcome, Stephanie. I love the move on SPY today and where it's at. So we closed right here, right now. We're in a neutral bias rank of 1. Right? The fib is right there. SPY is great. Move up, retest, fail, and at 629 is our next stopping point. 55 would be a confluence there as well. Okay, and you can make some really good money on SPY. And here's $2,340 on 10 contracts, $235 on one. Okay, so you can make good money on SPY. And I've said this before, and I'll say it a million times. There is not a person, in my opinion, that trades the market that should not be looking at SPY and QQQ as candidates every single day. Every single day. You know, I don't know, is Amelia in here today? Yep, so Amelia's in here. So her and I talked on Friday, Friday, I think it was. And she was talking about that she uses pivot points, right? And yeah, me too, right? But she looks at the ETFs. So you've got the SPY, the Qs, the RUT, sometimes diamonds, but you know, which IWM is RUT, right? IWM for Mary, IWN for Nancy, depends which one you choose to trade. But SPY is a phenomenal position. I don't think anybody should not be trading it. Everybody should have it on their list every day. We find trades for it every day. Well, if you're doing scalps, you could find trades almost every day on it. Yeah, almost every day. Right? So if we can get that fail, or we get that fail and drop, Brenda, I'm looking at that. But remember, I would day trade it. I wouldn't try to swing trade this all the way down. I would day trade it because today's flop, news based, could be tomorrow's hurrah based on news, right? Where we bounce right back up again. So if I'm trading SPY down today and it bounces and it gets above the moving average again, moves up, retest, and bounce, great. Then I'm going to go ahead and buy a call on it this time, right? I don't need to be the singular direction. Amelia said traded both Qs and diamonds today, 20% rate of return on each. Right. So get yourself used to being rich, not right. I don't need to be right. I don't. If you bat 400 in professional baseball, Major League Baseball, MLB, National League, American League, whatever it is, you bat 400, you're in the Hall of Fame, basically. Right? And you missed 6 out of 10 shots. 6 out of 10 times you were up, you did not get on base. You did not hit the ball. So how horrible are you when you can't even get half, right? In school, that's a 50, you failed. Jim said Q's is at a lower Bollinger Band on the daily chart. Possible bounce up off of it. Yeah, there you go. There you go. Brenda said I only day trade for the most part. I know that. Absolutely. Guys, there's a lot of opportunities day in and day out. You just got to find them. Lay out your plan, choose to trade directionally. And if you want to up your game, guys, you got 1 week of unlimited access to what we've got going on, all the live trainings in our mastermind groups. You got one night of mastermind, 1 night of trading you, 1 night of inner circle, and 3 more days of inner circle while the market is open. Don't miss out on it. Andrew, drop that link in again, if you would, please. Guys, we're going to leave it at that for now. I will leave the room open a little bit so you guys can go ahead and get registered on the mastermind group, and you should, right? You should. And if you don't grab this link and you missed, or you happen to be catching this on the replay, then go ahead over to the members area and you will see that listed there. I think we have it on, do we have it on Trading Like a Boss also at this point? Mastermind Week. Go over to tradinglikeaboss.com and it's up there as well. You can register for it right there. All right, everybody, you have a great rest of your day, and I will see you all at our next one. Take care, folks.